one stock that we want to talk about on First Word today, and as far as earnings go, which is Coal India. The earnings have beaten estimates thanks to lower expenses and better realizations from its fuel supply agreements. Nikki Mirchandan is standing by with the fine print. Nikki, we don't usually talk about Coal India as much, but the results were pretty interesting.
I think it's a stock which is we should speak about, because in the last 1 month itself the stock has rallied 11%. You can expect some amount of positive traction on account of good results, because they've clearly surpassed the estimates. Top line, we've seen a decline of around 6.8%, but that's higher than what the street was estimating. EBITDA, a solid performance there, 16.4% down, but then the numbers at 3,611 crore were way better than the estimate of around 3,100 crore. Margins, they have contracted to 17% as compared to 19.5%. If you look at the profitability, we have seen a growth there, because the tax expenses, they have declined by more than 63%, which in turn has aided the operational performance of the company. Where do we see this decline coming from? Essentially, if you look at the volume picture, it tells out. If you talk about the volume picture out there, that's been hit by the severe monsoons this time around that we've seen. Also, strike and subsidiaries has impacted the volume growth. FSA volumes down by 11% year-on-year basis. E-auction, that has taken a hit by as much as 12%. Totally, we've seen overall volumes being lower by as much as 11%. But let's actually understand where this surprise is coming from. It is essentially the cost control that the company has shown. We've seen the contractual expenses being down. We've seen the fixed employee expenses being stable. So that's one bit of it. And the other bit of it is realization. Now, if you talk about the realization, FSA realization, that's the best ever that we've had. If you talk about the growth out there, it's a 10% uptick year-on-year basis as compared to an estimate of nearly a 3 to 4% growth out there. That's clearly where the surprise is coming in from. E-auction, where if you talk about the realization, that has seen a dip of around 22%. It's missed the estimates. That's count of e-auction premium, which is now at some multi-quarter low due to lower international prices. Overall, if you look at the pictures as a whole, realization looks pretty 3.2% uptick out there, clearly on account of FSA realization, which is on account of the higher grade control and the supply to non-power consumers as a whole. And Neeraj, most of the brokerages have kind of given a thumbs up to that. You have JP Morgan, which has actually increased the target price and the EPS. And it's gone ahead and said that they expect the H2 to be better than that of H1. Goldman Sachs, which is retain the neutral rating, but then again increase the EPS on the counter, says that they expect the volume in the near term, however, to an extent to be impacted by the adverse weather. Edelweiss on Coal India, where they've said the same thing. They've again gone ahead, maintained that buy rating, but then up the target price, increased the EPS, and they've said that FSA realization is expected to sustain at that current level. If that's the case, then we're looking at solid set of performance coming in for H2 for Coal India.